Morning volatility can be oftentimes challenging to trade given the lack of information. However, some of these morning moves are some of the best moves that we see for the day. For example, if we take a look today, this is a chart of the NASDAQ. We can see we had the morning volatility give us a puke lower and almost a V-shaped reversal type of reversal. Any one of these points right here would have led to some fairly nice trading opportunities. However, this is of course with 2020 hindsight, we know exactly how the chart has played out. So the question is, what are some of the similarities, some setups that we can take advantage of in this morning period before we've even determined what the volatility landscape looks like for the day? Now for this V-shaped reversal setup here, we have a pattern that we have documented. You can find and learn more about that on our website, tosindicators.com/V-shaped-reversal. And there you can watch this entire series. It's 100% free, and you can learn a little bit more around this setup that I'm looking at. Now let me show you this screenshot, which I think helps to illustrate it. The overall gist is we'd like for price to be extended using our volatility clouds. We'd like to see these wedges forming. You can see that little V-shaped bird at the bottom of each of these candles going all the way down. That tells us that, hey, we're extended outside of our Keltner channels, and we'd like to see that pause and then reverse. And we have a specific set of criteria that we're looking at for the reversal. Now, this is the setup I'm going to dive a little bit deeper into today's video, but we'll apply it on a chart of the NASDAQ, and we'll do so in a layered basis. I'll layer on one tool or one indicator at a time, and we can talk through it. Now let's start first with understanding why we even think at this point right here that a reversal is likely or imminent. For that, we can load in our volatility box models, and we start with our scalper volatility box models. That's the most aggressive model that we have available to us, the one for the least amount of volatility. So that's this scalper model right up here. Now using the scalper, what we can see in the morning is price action has hit the lower end of our scalper volatility box lines. It did so with this green candle and continued to build a base right down here. So that's step number one. Our volatility box clouds right here with price action breaching tells us that, hey, we're expecting price here to start to chop around sideways and build a reversal. So that's step number one. We have volatility telling us that, hey, we're looking for a reversal here. Volatility is in the same confluence zone where we can look for a potential, in this case, buy side opportunity. Now, next up, we take a look at our Keltner channels to see, hey, are we extended using the Keltner channels? So for that, I'm going to load in our extended Keltner channels indicator. This is a free indicator set to 3.0 for the Keltner channels. And I can load in a band of the Keltner channels as well, so you can see how this indicator works. So now this is the NASDAQ. We have the Keltner channels loaded on here, along with the actual wedges forming. The wedges are the ones that we're paying more attention to right now, and the wedges will plot anytime price closes outside of the lower or the upper Keltner channel band. So you can see here we close outside, that's where the wedge turns on. Here we just have lows, but we close inside of the bands, so no wedges there. So all the way down here we have wedge, 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 wedge. This is the NASDAQ. If you'd like to see an even cleaner example, the Russell, I think, was a really nice example today. Take a look at the Russell here. We have wedge, wedge, wedge. So really all the way from 633 all the way down to about 646, price action is telling us we're extended. Same idea as the scalper clouds 2 here. We can see price action inside of the Russell, and we were on the aggressive inside of the Russell. We can see same thing, price action telling us that, hey, we're extended to the downside. So as of right now, volatility has told us we're extended, and we have our Keltner channel wedges telling us price is outside of this 3.0 Keltner channel line, and we're looking for, at the very least, a reversion to the mean. So far we've talked about volatility, we've talked about Keltner channels. Now we need to understand what are specific triggers that we can use to actually take advantage of this move. As of right now, we've seen the sell-off into our zone. We've seen price start to build a little bit of a base. We're starting to see a bit of a pickup higher, but there are specific triggers that we're looking for, and 2 in particular. Now let me remove all of this so we have a clean chart one more time, and I'll start with our first trigger, which is the edge signals indicator. This is our overbought, oversold indicator. It plots these green and red arrows on our chart, and in today's case, that green arrow came right here, 6:49 a.m. Pacific. That's when we know that we're officially in, or out of rather, I should say, oversold territory. price is broken even outside of our previous resistance, we're starting to form what seems like a base in which momentum is now starting to support this move to the upside, what looks like a V-shaped reversal. And in fact, before we move on, make this even cleaner, I think the trend lines do a good job of illustrating this. If you had to try and draw a price channel here, that price channel would be almost like a V here, where if I extend that out, you see just how narrow that is. You can then see we build this little bit of a base here before we then have this reversal right here, which is almost as narrow as that morning sell-off as well. So definitely a V-shaped reversal sort of idea here with very tight price channels that you're looking to take advantage of. Now coming back in, so we take a look, we have our oversold signal right here, which is our opportunity, our first trigger that tells us, hey, we're looking for price action to move up higher. Our second trigger is our momentum cross, which is nothing more than the momentum cross, which is nothing more than the 3 EMA crossing either above or below the 8 EMA. So very simple here, but something as simple as that, if we apply it on our chart, we can see we have our oversold signal, the crossover takes place in that next arrow, and when applied with a particular setup in mind, that momentum trigger, that very simple 3 and 8 EMA crossover, gives us some very nice clues where we expect momentum to come into place in the market and drive price action in one direction. I hope you found today's video to be a useful demonstration of this very simple setup to take advantage of the morning volatility. One more time to summarize, we have these Keltner channel wedges that we're looking for. That tells us price action is extended outside of the Keltner channels. We also have our volatility box, which tells us price actions extended outside of our volatility zones. When we combined both of those together, we knew that we were looking for price action here to stabilize and reverse, but we needed specific triggers to take advantage of that. And our trigger for that was off of that 1 minute time frame chart for the morning, where we had the edge signal and the momentum cross. You can pick and choose whatever works for you. For those of you that are a little bit more even aggressive, you might be looking at entering in this base instead of even waiting for this trigger. The overall premise here is, what does an extended setup look like? How can you take advantage of some of these morning setups when they take place? They don't happen too often, but when they do, you really have a nice opportunity to take advantage and almost be day done before we even hit that 7 a.m. mark, which is when typically we're looking at just getting started for the day with our trading activity. Hope you found this video useful. Take care, everyone. Good luck trading, and I'll see you in the next update.